So my expectation is still to look at the non-farm number. Overall job growth, of course, starting this year was very, very strong. First 500,000 jobs in January, then 300,000 jobs in February. I expect to see some moderation going back to maybe 200,000 jobs being added to the economy. Still keeping in mind, though, that 200,000 jobs, when we were talking before the pandemic about such a number, we would be very happy. It is still higher than the average of 2018, 2019. So overall, still a robust jobs report.
Frank, where do you think we'll see those gains? What sectors?
So over the last couple of months, we have seen, especially in leisure and hospitality, and also in healthcare and social assistance, that they have been adding most jobs to the economy. When we think about leisure and hospitality, of course, it's one of the very few sectors that hasn't returned yet to pre-pandemic level. So there still seems to be some pent-up demand. But especially the increase in healthcare services and the jobs that have been added there to the economy, that has been going at a very rapid pace. Of course, we have a US population that is rapidly aging. Of course, they require a lot of more healthcare services. So I expect that trend will continue. Retail trade also has been adding more jobs than I had actually expected. We saw some weakness during the holiday season, less upstaffing, but last month they also added many jobs. So I expect to see a similar picture also tomorrow.
We have seen layoffs pick up, and you lay out the sectors that are most in danger of layoffs as we move forward. What are those and why?
So let me first talk about layoffs in general. I know there have been many headlines, and I think many companies are indeed making announcements about layoffs. However, if we still look at initial claims for unemployment insurance, yes, it is a little bit higher after these revisions of today. Still, they remain very low. So if you compare them to before the pandemic, still, we don't see really widespread layoffs. If we do think about where are we going to see layoffs, which industries are going to be most at risk, it's going to be the information services sector, very tech heavy. We have already been seeing some employment declines over the last few months. In addition to that, actually, since October, transportation and warehousing has also been on a slight decline. We expect that to continue. Transportation and warehousing, of course, was adding many jobs shortly after the outbreak of the pandemic. There was a lot of consumption for goods. Many people wanted to have online services, were ordering a lot of stuff. Now, of course, with the economy changing its demand more towards services again, we do expect that also that sector is likely going to show softer hiring.
Frank, what factors did you use to try and determine the likelihood of job loss and what sectors we were going to potentially see them?
So there are, of course, many factors that go into understanding where job losses are going to happen. I think one that is very important is where are the labor shortages? If an industry has many labor shortages, probably these employees will be more careful about laying off their workers because they know, especially if a recession is going to be just short and shallow, if the economy starts growing again, they have to rehire those people, and it can be very difficult and expensive, as the last 2 years have been showing. Probably also very important is how sensitive some sectors are to interest rate increases. We know that especially the housing market has a big impact on construction. So, for example, construction is very dependent on what is happening to interest rates. So also there we expect to see some weakness. On the other hand, if you think about healthcare services, education services, much less cyclical, so much less impacted by interest rate hikes. And then lastly, just the trend that we have seen after the pandemic, some sectors probably overhired, again, transportation, information, and some other sectors like leisure and hospitality is still below pre-pandemic levels, so there will be less need for layoffs.
And leisure and hospitality, you think we'll continue to see the gains we've seen in recent months? And does it lead the safest sectors?
So I would say that leisure and hospitality will continue to add some jobs, probably not anymore as rapid as we have been seeing over the last couple of months. The closer they get to pre-pandemic level, the closer they get to full staffing again. So also then when they're at full capacity again, there's simply less need for hiring. We're already seeing that in other sectors. But since it is still one of the sectors not back to pre-pandemic level, also one of the sectors where labor shortages are probably the most severe in those in-person services industries, I expect that leisure and hospitality, weirdly, if you compare it to the COVID-19 recession, they were the hardest hit. But this time they will actually maybe get out of a shorter and shallower recession in a much better shape.
Frank, what are you seeing just from the consumer? Because your latest data out on consumer confidence showing that it actually ticked up in March. And this was after the fact that we saw some turmoil in the banking system, lots of fears about contagion, what that could potentially look like. How would you characterize, or what are you seeing in terms of trends right now with the consumer, and whether or not you expect that to continue?
So when we look at the consumer and how they are looking at the labor market, they're actually pretty positive. When we look at the consumers saying, are jobs hard to get? Most of them are saying, no, it seems that jobs are really plentiful. On the other hand, there's of course some weakness in the economy, and especially inflation has had this impact on the expectations in consumer confidence. I think as long as actually the Federal Reserve continues to raise interest rates, signaling that they do want this economy to slow down, as long as inflation reports will be coming in, that this will also have an impact, of course, on how confident the consumers are about the next months in the U.S. economy.
All right, Frank Steemers, always great to get your perspective. Thanks so much. Have a good weekend.